About 5 years ago, we asked Charlie Munger, we were sitting right there, what he thought of Bitcoin, and he said rat poison. Back then it was about $100+ per Bitcoin. Today it's 9,000. Is it still rat poison?
Well, probably rat poison squared.
Yo, 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 and welcome back to another episode of the Nyc Griff Show. Now, public service announcement, don't forget to remind your friends and family that one Bitcoin is one Bitcoin. Now let's dive in. Today is Saturday, October 1st. It is 9:37 a.m. Griff, it's been 3 or 4 weeks, can't remember, since we filmed a show. How have you been, man? And what are some of your thoughts on Bitcoin during that time, since we haven't talked a ton?
Wow. I guess it's been like about 3 weeks, brother. I hope you've been doing well. I know we kind of keep up, but this is kind of how we keep up nowadays. So, hope you've been doing well. Thoughts on Bitcoin? I've been stacking. I hope everybody else has been stacking. It's under 20,000. My thoughts are that seems like the system itself is more at risk than the Bitcoin network. Seems like the Bitcoin network is just fine. I've noticed that the hash rate was almost at an all-time high throughout the last 3 weeks. I've noticed the pound is, obviously hit like a 13-year low. So it's like old system, new system, which one's better? And it looks like Bitcoin actually might be more resilient. I understand it has a 60% drop, but if you're in Bitcoin, right, network first, and not the price. As long as the network is the network and it continues to grow, the price will eventually, come along with it. But we in Bitcoin, Nick, do we care very much about, the price of dollars? I mean, yeah, I'll come along at some point, in my opinion. But yeah, that's kind of my thoughts, is that Bitcoin's been quite resilient. I mean, honestly, it's probably been a better asset to hold over the last 3 months, maybe not the whole year, but over the last couple months, it's kind of bottomed out here, it seems like. And people are really waiting to get in. I keep hearing from other people, 15, 10. I'm like, yeah, this again, this is not a financial podcast, but you can't really predict the price of Bitcoin, how low it will go. Nobody can actually predict that. Nobody really knows. So if anybody actually tells you that they know, I would probably turn and run. But those are some of my thoughts, Nick. What about you?
Man, I think it's been a really interesting past couple of weeks. I guess more broadly over the past couple months, maybe the past 6 months, I almost feel like Bitcoin is front running everything else, because we know that Bitcoin's a free market. It's not manipulated. And due to that, I got to think that the market the market always responds quicker than some central authority can make changes based on what the market says, because the market has to react, has to respond to what's happening before you really see the effects of something happening. And I would think that a network that is dictated by the market is probably what is the best, most accurate real-time information. And that is what Bitcoin is. And so I've got a half a mind to think that, man, this 50%, whatever exactly it is, drawback that we've seen since the $69,000 high 6 or so months ago, I got to think that that is the correction that is coming in all of the other markets right now. That's kind of a quick thought. But dude, there's a ton of stuff going on in Bitcoin right now.
60% correction is pretty out there. But to be honest with you, is 60% really that out there, or is it the time frame? What is your time frame on the 60%? Because in my opinion, that's kind of what's different about Bitcoin and the other system as well. Outside of the fact that, yes, it's a free market, it's also just smaller. And if you kind of are looking at money now like networks, right? If you're looking even at cryptos as money, technically it's just how big of a network can you grow and how many people will believe in this network, right? That's what money is. And the dollar has a huge network. That doesn't mean it's not shitty money, because it is shitty money, but it's a big shitty money, and it's backed by government, which is honestly proving to be a pretty good way to control. It's been a good way to control money. They've been able to successfully achieve 4% inflation every single year, and people still seem to actually be happy enough to the point where in America, nobody's rioting over the money. Nobody's rushing banks. Nobody's doing any of these revolutionary things yet. So arguably they've been doing just fine. I mean, other countries, they're experiencing those riots and those crashes, And some might say that that's coming to us. I think, Nick, you were talking about the dollar milkshake theory. That's kind of it, right? Like where everything is eventually going to trickle back down to the United States, or the United States, has its hand in everything. Or what is the definition or theory behind that?
So I have to be honest here. I haven't read a ton. I haven't done a ton of research, but the couple of videos that I've watched and the couple articles and stuff that I've read, essentially what I've found that dollar milkshake theory is that the dollar is the reserve currency. It's the base layer money for the world right now. And then you can kind of debate like whether it's, treasuries, whether it's the actual dollar itself, like what is the actual base money. All that said, the dollar is the foundation. And dollar milkshake theory seems to say that all these other currencies in the rest of the world are crumbling, are falling, well, including the dollar. Everything is falling, but all the other foreign currencies are falling faster than the dollar. And because they're falling faster than the dollar, people that own assets and wealth in those other foreign currencies are jumping to the dollar and or something that is not crashing as fast as theirs is. And in so doing that, a lot of value will get pushed and pulled to the dollar. And therefore, it basically turns into a game of last man standing. Whoever the last man standing is the one that wins all the chips in the middle of the table. And so the game is, the game is not how can I fix the system and how can I make it better for everyone else? How can I actually help people? It's how can I be the last person to fail? Because I'm the last person to fail, everybody jumps to me, and then everybody uses my network, right? You talked about the networks. And so,
or in a sense of durability, like people look for a safe haven, people look for a place to trust. For the most part, like our world is built on trusted parties and trusted systems. And this is what I saw Jack Dorsey talking about, is like, we just have to take the old system. It's not bad, right? Like obviously a lot of innovation has come out of this system, a lot of really great ideas, arguably a lot of really crappy ideas that got way too much money, which is not good for the overall, society. But it's about creating trustless systems across all kinds of industries and within all kinds of businesses. Because if you look at Bitcoin, if money can truly be trustless, that might be the most important part about Bitcoin, just because the world is built on trust. And if you know anything about trust, it's really hard to build a relationship with somebody that you can trust in the real world, just because you don't know the person. It might be centered around business. It might be centered around a religion. It might be centered around family. It might be centered around anything. But trust is hard to come by. And so if you have a world that is actually built on trust and every system is built on one gatekeeper, we didn't build the right way. And you can kind of see that because there is inequality in the world, let alone there is inequality in America. There's inequality in the world. And I think you're right. Like the dollar will be the last, because everybody's, that's the last one to go, so to speak. I do mostly think that, which is why I think that general thoughts, this will be a long crash, everybody. This will take a long time for this thing to unwind fully. And the United States will actively fight a transition of monetary power. They're not going to go quietly, in my opinion. Obviously, there's been a lot of current events going around Russia and things like that. And that directly affects money, because war is the biggest waste of money and energy that the world can see. So you have to acknowledge that when you're talking about money. And can Bitcoin withstand a world war? That would be really interesting to see, like where Bitcoin goes if the United States chose to fight the world via, going to war. Because if you look at history, we might be at the point in time where the United States does that. And it's just the historical reference point to all the other times world monetary powers started to fail. And eventually they go to war, because if you ruin everybody else, if you kick over everybody's sandbox, at least you guys are all going to start again from the same place. And maybe that's like some part of the theory. I don't know. But those are my general thoughts. That was good. I mean, like, that's a lot of stuff that's going on. But although me and Nick have not been on the last 3 weeks, we are on Twitter. And we're kind of revamping the podcast. We took a few weeks away, and we're kind of going to come back at everybody, and we're going to try and engage, obviously, the Twitter sphere, because we really do love the tweets. Like, that's a lot of the reason why we started to get into the podcast and into Bitcoin. And I know we're going to start doing some tweets of the week, so I'm going to let Nick take it from there and start, ripping some of these funny deals off.
You have said it. It is tweets of the week time. Here's the fun part. So we're gonna go through a couple of tweets here, several things that we've seen throughout the past. I guess this week it'll be for the past couple of weeks, and then at the very end of the show, we are going to crown the winner of tweet of the week, and that person gets a special shout out on Twitter. We're going to put the clip up there. It should be great. But we have had tons of hilarious clips, interesting clips, shocking clips. Tweets that we've seen over the past couple of weeks. So let's dive into this sucker. We have to start with something that I think is freaking hilarious. Hold on, I gotta pull this window over here. I think
that's really interesting. I think Bitcoin, like in Twitter, are really synonymous. Like there's a synergy with it. It'll be really interesting to see the types of social media networks that come out of like Bitcoiners. Because I know Bitcoiners are also tired of like the censorship and centralization of these platforms. And so that's why sometimes Bitcoiners have the best tweets, because the funniest stuff is always the most out there stuff, just for everybody who's listening. The funny stuff is not like, just reposting the same thing for the 1000th time. The funny stuff is people who are really like putting funny videos together that you don't even know about on Twitter.
So this is Naive Meme. I think that this video is hilarious. I love it. This is the relationship between Bitcoin and the hodler. Love it. So this is Naive Meme, at Naive Meme with 2 eyes there. I thought that was a great one. Let's keep diving through here. Another one that we've seen on the show before. Hammond of Texas at Field Nos. He says, I accidentally left the DXY daily chart open on my computer and forgot. DXY, for you guys that don't know, is the dollar index. He says, an hour later, I glanced over and for a second, I thought Bitcoin had mooned, and got that feeling when your favorite girlfriend that dumped you suddenly calls you out of the blue. But it was just a butt dial. Love it, dude. These tweets are so good. And I think that this is such a fun way to react or to interact with Bitcoin, because this is the network. The network is the people that are involved in it. I think that it's hilarious.
I really don't know what I would do if I thought Bitcoin went to the moon and I was just like casually looking at it. I'd be like,
oh yeah. Wow. Here's another one that I thought was really, really good to see. This is from Preston Nyc. Is that how do you pronounce this guy's name?
I'm going to go with that.
Okay.
We can't be perfect. Hey, we can't be perfect, brother. We don't know. Some of these
he's got a chart here, and it says performance of a few major indices since the COVID bottom. So looking at this chart here, you can see that Bitcoin, if you notice the chart, Bitcoin is significantly more growth than all these others. But look at what he says here. So starting from the bottom going up, long duration bonds down 33% since the COVID bottom. High yield bonds plus 4% since the COVID bottom. Now we also got to think about inflation here. Plus 4% minus, call it 8.5%. So your still real yield is negative here. Gold plus 7%. Russell 3000 index plus 60%. The NASDAQ plus 62%. Commodities plus a whopping 86%. I believe commodities being increased in price typically means that you're having currency issues and less confidence in the currency. So that makes sense. And Bitcoin, none other than beautiful Bitcoin, is plus 201% since the COVID bottom. Isn't that wild? I thought that was a really good one. What are your thoughts on that one, Griff?
I mean, more or less since the COVID bottom, a lot of money was printed, as you know. So, I mean, it just means that a lot of more funny money is coming into Bitcoin. I don't really know if I would view that as a good or bad thing since like the COVID bottom, because I don't know how many people, since the COVID bottom, that's like March of 2020. So that's around the time I got in, or I got in right before that. Because I wasn't really paying attention to markets, to be honest with you. So I didn't even really know when bottoms or anything were like at that time. Mm-hmm. So, I think that's very interesting. It's nice that Bitcoin has outpaced the commodities, right? Because that would mean that it's the only asset you could have, or the only money that's actually like, in a sense, then outpaced inflation from the jump, which then Bitcoin is an inflation hedge. I mean, but it's still funny money. It's kind of hard to like decipher, because who knows, man, a lot of that money did flow into powerful hands. So maybe that's also what it means. Maybe it means that really big institutions were able to get a lot of Bitcoin since that COVID bottom, which would be interesting because not a lot of people know when they really get in. So who knows? But that's interesting. It's not a bad thing for it to be above everything else.
Absolutely. Another great one here is from another podcast that I've actually just recently listened to a decent chunk of. Love the Blue Collar Bitcoin podcast. But they had a tweet here. It says, the more I understand about markets, which is still very little, the more convinced I become that most mistakes are made because people get distracted with overly short time frames, right? This is high time preference. I thought that was, man, that's such a great take on it. You know,
I think that's my favorite tweet so far, just because that's so true about everything, but especially Bitcoin and markets and price going up and down, because people are so emotional about their money because they watch their 401k way more often than they let on. And it's up, it's down. They're just like, and then they want to make decisions based on that overly short time frame. I really like that. It's good that other people are seeing
Speaking on a little bit on the networks side of things, I've heard so many people here recently talk about, basically it's this idea that people are so used to a central authority, a central bank controlling money, that they can't understand and grasp the idea of a decentralized money. And I think it's hilarious that people always say like, oh, what is Bitcoin? It doesn't make any sense. You know, it's too complex. It doesn't work. It's too clunky. Okay, so this tweet here is from the Bitcoin conference, at the Bitcoin Conf. Go check them out. It says, I'm not interested in Bitcoin. I don't understand it, ... Okay, explain fiat. Here's a photo of the entire flow chart of how money works in this fiat system. Talk about complicated, right?
The only thing, geez, yeah, that is nuts. I think the only thing is that, well, the less sound money is, the more ways it can be manipulated. And you can see, like, when I see a chart like this, I think of like time. I'm like, man, like when the money started to now, and you can almost see like each market popped up because somebody just, they found a different way to play the game. And then the money had to adapt to the game, which is so interesting. It just kind of means the money's crappy and it's not backed by anything. Because if it were Bitcoin, I mean, dude, it's going to be really hard to create, right? Like within Bitcoin, new industries, new markets, because people are going to be really stingy with their money, which is in light very good, not very bad. That's a very good thing. And it's just, look at offshore investors. Like, that doesn't make any sense. Like, offshore investors, so what, just money that nobody knows about? So how does money that nobody knows about affect the system? I was thinking the other day, like, how can you really even calculate all of these little funny games you see in here with tax breaks and offshore investors and all kinds of other places to invest and loan your money? How does that actually affect society and inflation too? Does it affect it? Like, does it have a role to play? Is there like ghost money, right, that we're not even factoring in outside of just what was printed that is affecting the system? What do you think? Like, I don't know, but that chart is like, that's cool. I don't know. It's
pretty scary for sure. Here's another one that I thought was pretty interesting here from the Bitcoin Archive. Everybody knows this page. Bitcoin wallet dormant for 10 years, moved 510 Bitcoin. I think another interesting metric is the amount, is the percentage of Bitcoin that has not moved in X amount, months in the past or whatever. I think that's really interesting. I think the most recent one I saw maybe a couple weeks ago was like 60% or something of Bitcoin hasn't moved in the past, 6 months or something crazy. Let's see here. Let's keep jumping through this deal. Oh, dude, this one was interesting here. So this is from Dan Tapiro at DTAPCAP. He says, hey, Novo, whatever that word is, guys teed this up. Seemed too big to me to be just us, i.e. thought it was global originally, but debacle in 60-40 portfolio numbers. Basically, what this is saying is this is the largest wealth loss in the shortest period of time ever. And so this is a 60-40 portfolio in the S&P 500 and a 10-year treasury. So 60% in the S&P, 40% in a 10-year treasury. And you can see that these numbers go all the way back to 1928. And so you can see the positive and negative years. So I guess in the shortest amount of time, see, because I'm seeing a 1931 negative 27%, 2022 is negative 20%. So
and also people need to understand when they look at these charts, do you think people have these like green and red indicators where they only see a few red numbers and they're like, oh, well, then it went up way more than it went down? When it says minus 20%, that means all of the green numbers all added up ever. It doesn't matter. It's always only out of 100 for the red numbers. So it all went down 20%. Just to clarify for some of the people on the podcast, because that's something I always messed up in my head about statistics for a while. I don't know why, but it's just something people don't think about enough. Minus 20% is a very difficult thing to come back from. Just like, I mean, if you go further down, it's more difficult as you go further down. So,
yeah, the negatives have much more weight than the positives, which is a strange concept. And just go look at a couple examples if you want to figure that out.
It's really a mind-blowing concept because it's just numbers. You're like, oh, well, the numbers are not the same numbers, you know, Nick?
So here's one from Pomp here, and this is kind of what dollar milkshake theory looks like here. And I forget, I think that I'd seen another deal that said that this chart actually isn't exactly accurate based on what it was compared to or something like that. But the idea here is that as these foreign currencies are dwindling in relative strength, relative to all the currencies in the world, as the Canadian dollar, Australian dollars, euros, British pounds, and Japanese yen, as they dwindle in relative strength, that value flows to what is more strong relatively, which is the US dollar. So the dollar is seeing basically the flow of liquidity going from these other currencies into the dollar, which creates this kind of artificial strength of the US dollar, which also all at the same time, as interest rates are increasing, the bond yields are increasing, meaning that we as America have to pay more in stronger US dollars to other people who hold these government debts or these government bonds. Dude, so strange, very strange. But I thought that was another interesting one. Here was one from Bitcoin Magazine. Just in, lawmakers introduced bill to let 401k retirement accounts invest in Bitcoin and crypto. And that was from The Block. Another one from Bitcoin Magazine. Official, German inflation hits 10.9%, highest in 70 years. That's interesting. Here's one that I love. I think is a great one. Another one from Bitcoin Magazine. That's kind of weird.
That's always a good one forever and ever and ever and ever and ever.
Banks are closed until Monday. Bitcoin's going to be open all weekend. I mean, how easy is that to sell, right? And then something else that I thought was freaking hilarious. I think this one is hilarious. Lit Capital. These are guys that I just recently found. It says the Fed trying to save the economy. I think that this is hilarious because it's like, okay, we got to get this ball down there, but it's like, we just can't figure it out. We just can't figure out how to get this thing done. And they're so desperately at this point shooting the bowling ball down the alley. I thought that was hilarious. So those were the contenders for Tweet of the Week. We are going to crown the Tweet of the Week here in the outro. So Griff, keep your thoughts together. I think you and I may agree on a couple of them. As far as final contenders. So, or do you want to maybe narrow it down to like 3?
No, we can just talk. Yeah, we can just sort through it right at the end.
We'll do it in the outro. Yeah.
So with all of those things, it's really good that our next thing is going to be the market check because it's okay. All of these tweets, like, is Twitter really a good place to follow news? Well, I mean, like, let's look at the markets. I mean, you would think that with that news, the markets. The last time we were on, Nick, the markets were rallying. It's funny perspective for us. The last time that we were on this podcast at the beginning of September, it seems like the markets were rallying a little bit and everybody was getting a little hopium. And it's like, you guys, in a recession, the markets come back up like 10, 12% sometimes. And then it goes zoop, right back down.
Yeah, I think that's been something funny, you know, like you see Bitcoin shoot up real quick and then shoots down real quick. And you're like, what the hell's going on?
You still get FOMO, though, when Bitcoin goes to 24 and you're just like, whoa. How to get there that fast? I don't have enough. Like so quick. Your brain switches so quick. And that's why I've been actually, that in and of itself is why I'm buying so much right now. Because as soon as it goes to like 23, I get 7 text messages, dude. And it's like, I'm like, I don't care as much because I've been buying for a little while. But obviously, yeah, when the price goes up, people are going to start FOMOing in. Like, that's what happens. That's why Bitcoin has these huge blow-off tops. Because, yes, at the end of the day, there's only 21 million UTXOs out there to sign your private keys onto the public ledger that will build the new world. So, in a sense, like, it's important, guys. So, anyway, market check, Nick.
Market check. So, let's look at a couple of these headlines here. And then let's dive into some of the numbers here. So why it's been a bad week on Wall Street. Okay, so it seems like there may be something going on. Brazil's got a presidential election going on. Travel companies are paying you to open their apps. Okay, that's interesting. Now, another big one here is Nord Stream's explosion was a climate disaster. It says what it signals could be worse. Here's much more expensive average home became over 1 year. So it seems like generally there's kind of a negative sentiment in the market. So let's look at Bitcoin. Bitcoin, the price is sitting today at $19,323.08 dollar price, right? So don't get it twisted. One Bitcoin is one Bitcoin, but we do live in a dollar world. Here's, Griff, some of that stuff that you can see where Bitcoin shoots way up and then comes right back down to where it was at. So that's September 30th. That was literally just one day. One day it shoots way up from 19,200 to 20,100 and then right back down. I'm sure you've seen, oh, now that's interesting. Oh my God, Griff, I have never seen this before. I did not know that I could do this on the Apple Stocks app. Wow.
Oh, that's pretty cool.
That's incredible.
It's amazing when you learn that's something new for the first time.
You gotta love that. So there's where
you gotta love first times, Nick. You know what I'm saying? Like that's important. Even Bitcoin, you gotta love your first time.
Let's see here. So here's your year. So here's the $69,000 high. It's showing 67 there on the average. But man, just look at this long, slow crawl all the way down to where we're at 19 today. You know, it's pretty wild to see that. Look, there's your past 2 years. You know, that's probably right around the COVID bottom. When was that? Either way, it was somewhere right around here, I think.
COVID bottom would be early 2020.
Yeah, early 2020. Anyways, maybe right around there. March, yeah, it's probably March, I think, was there. Anyways, so you can see that. So let's look at the S&P here. The S&P is sitting at $3,585.62. Let's look back at the 1 year or the 2 year on that. So you can see let's look at the 5. So there's the COVID bottom. You see it run all the way up. From there up, it runs up 106%. And then from where it's at that bottom, it's fallen down 24%, almost 25%. So the S&P is down 25% from its top. Bitcoin is down 70% from its top. Let's look at
good. That's good, just so everybody knows. Good.
That's good, yeah.
We like that. We like when you sell your Bitcoin on this podcast. Like if that wallet that moved 500 Bitcoin, right? Twitter, because Twitter since the last 3 weeks, look how the price has gone down. People are moving their wallets out of Bitcoin. Guess what? Me and Nick are strong hands. We'll buy the whole thing. Please sell it to us. Please sell us all of your Bitcoin. That's all I would like to say about the Bitcoin price. Sell me all of it. I want all of it. So the NASDAQ rises from the COVID bottom up about 136% up to the top. And then from there, it's fallen off 33%. Let's look at the Dow Jones. All of these, I think, are going to be pretty similar. So from the Dow Jones bottom, it looks like that top was somewhere around 80 or 90%, 85 to 90% at the top. And then from there, it's fallen 29 or 20%, I think it was. Now, the VIX is an interesting one because the VIX is supposed to be, you know, it's known on the streets as the fear index, the volatility index. And when the VIX is high, that means that the sentiment in the market is more so bearish and not bullish. We can see over the past year, it's rising to a higher rate, or not rate, but a higher area than kind of some of these lower spots. Over the past 2 years, it's pretty high, right? I mean, comparatively or relatively.
over the past 5. Let's look at the past 10. I mean, over the past 10, you see from 2012, it's pretty low. It's in the, I don't know exactly what the numbers here on this are, but it's in like the mid-teens, low teens, high teens, hit 20 a couple of times. And now we're sitting right now at 31. So the VIX relatively over the past 10 years is a pretty high number. Looking at oil, oil's coming back up a little bit since, it dropped off big time. It went up high and then dropped off. Here, I know it went up to like 115 at one point a couple months back. It dropped all the way down to $76 a barrel, and now it's sitting back at 79. So that's sitting there. We know that the dollar's relative strength is increasing. Check out this dollar, dude. I don't know exactly what this means right now. Like this bottom here is from 90. It's $90. Now, again, I don't know exactly how to read these dollar charts here. So I need to read up on that. But look at this run up in the dollar. I mean, the dollar goes from 90.03 up 24% to, where it sits today at 112.17. So I'm not sure exactly what that means, but I know that it's
I can't comment either. I can't comment either. You know what I'm saying?
Looking at the 13-week Treasury bill, these suckers have shot way up, which is the yield, right? Which is the yield on, or the cost and yield of these bonds is increasing, which is tightening this financial situation that we're in. So here's the 10-year Treasury. There's your 5-year, your 10-year all time. You can see that this is spiking pretty hard. I mean, comparatively, relatively to the rest of, history here. It's still low, historically still low, but is spiking currently. And here's your British pound. Just because I saw this pop off the other day, I had to pull it up. Pretty interesting there to see an all-time low in the Great British Pound compared to the dollar, which is pretty wild. What do you think, Griff? Let's look at some commodities, eh?
You know what I think? I think the commodity prices will be more interesting than the market prices. I think the markets, it's a highly manipulated environment. So think what you will about that statement. Every chart that Nick just read, I feel like is relatively manipulated. So it's not really, it's kind of hard to speculate because I don't know. I'm not in the game. I'm not in the chair. I'm not the one that actually calls the shots for anybody within those corporations. So I have no idea where those things are going. But as Nick knows, my money that's not where I put my time. When I go to work, I don't think about putting it in corporations' hands. I don't know. Right now, that's just not what I do. So that's what I think. I think it's hard to trust them, and I think that the Blue Collar Bitcoin podcast is right. Charts are very hard to read, and I still know very little. So I don't want to share any of my insights on that. I think the world is a long game, not a short game. If it's a short game for you, unfortunately, that means you died suddenly or you didn't make the right choices. And I would not like to die suddenly, but I know that I can make a lot of the right choices. So I'll be around. I'm here.
Absolutely. Yeah, it's the markets are strange. The markets are in the short term. It's just so difficult to really understand what's happening and what's causing what. There's just so many factors. It seems like the best thing to do is really just to be able to look back and see, oh, this caused that and that caused this and then this happened and that's where the prices went after that happened, just to get maybe an idea of like, oh, okay, maybe if this happens, then we can move forward and look at that. But what is the main point of the market check, Griff?
The main point of the market check is that me and Nick store our value in a market, so to speak, where one Bitcoin will always only be one Bitcoin. And that Absolutely. Is the motto of this podcast. I mean, it has been, and it's been since we started it. And honestly, it's what actually has probably kept me sane throughout like this entire year. I mean, somebody who's, I guess, like lost 70% of value in the Bitcoin would be more fearful than Nick and I are, except for I've stacked harder this year. And I don't really focus on reading charts. I focus on actually accruing value with my time in the real world. So I divvy some of that to Bitcoin, obviously, and some of that I use for my real life. And I do definitely save in dollars because liquidity is important. So I think all of those things are kind of important to remember. But you don't have to have all your money in a 401k or markets to, make money with your money. And you also don't have to like know how to read charts to be a wealthy person. That's why I think Nick and I, like, we might not be charts people, but we are investors with our time. We are investors with the way that we think. And so we've actually just basically gravitated towards what is high quality money. Me and Nick like quality, and Bitcoin is the highest quality money, so to speak, that you can ever hope to own. And while the price sometimes doesn't reflect that, I feel very confident in that because I am supporting the money that I want to support. I'm supporting what I believe to be the future of money. And there are a lot of threats out there to this money. Yeah. So I don't have time to really speculate on a lot of the other markets. I have a lot of time to focus on Bitcoin. And one of the most recent threats, dude, that's going around is these CBDCs. And it is very scary to think that a government who already has obviously all these markets that Nick and I just talked about, things that are going up 100% in the span of 2 years, that's manipulation. That's being able to control what the money is and what money is doing. And so what do you think when central banks that are in cahoots with a centralized government, what are they really going to do with money? Like, what is the extent to which they will go? And I mean, in my opinion, I don't really think there's anywhere they won't go. So I'm not a fan of central bank digital currencies. And I think it's important for Bitcoin podcasts like ours to probably like tell everybody what they are a little bit. Nick, I don't know if you want to give a little broad definition or how much you hate them, because I know you just had an article read about them, so you're pretty well versed.
So the central bank digital currency conversation is a hot one right now. There's a lot of conversations going on about it at the federal level, and it's very interesting. So a while back, a couple months back, President Biden signed the executive order that basically said, "Hey, we want to do some research on digital assets," and that executive order did not put anything into practice. It didn't set anything in law, nothing like that. It just said these entities go out and do research on these and these things, and they name them all out. And then they say, bring back this research and tell us what you find. And now we're starting to have some of those agencies come back and present their reports. And now we're seeing people like the chairman of the Fed, Jerome Powell, make statements about what this could possibly look like. And now it's scary because a central bank digital currency could be designed in a way that could be favorable. It could be designed and copied just as Bitcoin, and they could call it the digital dollar, central bank digital currency. They could do that, but why would they be incentivized to take their control away from themselves? They wouldn't be. They're actually incentivized to take advantage of the efficiencies of a digital currency, right? Because there are innate efficiencies. So take advantage of the efficiencies, but also maintain control. I got to pull up a tweet here for you. You got to listen to what Jerome Powell says here. This tweet comes from Disclose.tv. It says, now U.S. central bank digital currencies would not be anonymous, says Federal Reserve Chair Powell. So listen to this piece here from him.
We think that there are 4 characteristics of, if we were to pursue a CBDC, it would at a minimum have the following 4 characteristics. First is intermediated. Privacy protected. The third is identity verified. And so it would not be anonymous. KYC. It would not be an anonymous bearer instrument. And fourth is transferable or interoperable. So we would be looking to balance privacy protection with identity verification, which has to be done, of course, in today's traditional banking system as well.
So I think I understand what he's trying to say. I think that people on that side of the fence that want to do what's better, I think makes sense to say what he said. But whenever you expand your perspective and look outside of that, what we're looking now at is that this central bank digital currency that the United States is going to look into is going to be intermediated, like he said, meaning they're going to verify, that transaction can happen. So it's going to be intermediated, and it's going to be KYC, know your customer. More so, they're going to verify your identity for your transactions. So it's not going to be anonymous, and it is still going to be controlled.
I just have to add, all of that is correct, but what I see underneath it here is somebody who, I don't understand code super well, but I also do understand enough that cryptography and Bitcoin, one of the great things about it is how transparent and actually not anonymous it truly really is. Obviously, it's hard to understand like where the wallets are currently, but it's actually not very anonymous. It's very open source. It's very like, you know, everything. So everything he's kind of saying is slander against something that's completely transparent. Do you know what's not transparent? A central bank digital currency in which it's not the fact that it's not anonymous. That doesn't bother me. It's that they're the only ones that know everybody. Everybody else can't verify everybody. That's the problem. They're the only ones that can verify anybody. They're the only ones that can stop anybody or start anybody to do, or, you know, like open an account or close an account. That's crazy. That can't happen. And it also points to the fact that how many of them will there be? Jerome Powell, Mr. Money Printer. So it doesn't really matter, I mean, like what they do with it. At the end of the day, I don't really think it's going to get picked. And I think that private money and Bitcoin will absolutely outpace the innovation of like a Federal Reserve central bank digital currency. The only advantage they have is obviously what Nick showed you, is that the dollar will gain strength for a while against other currencies. And some might say that eventually the world will see like 3 currencies, and it'll be easy for the Federal Reserve to pivot that into, hey, it's just on your phone now, guys. Do you know what I'm saying? So it's all an interesting future that we're not too far away from, because iPhone and Apple and how big they're getting and where things are going, like it's all very possible. But I just wanted to interject that, like, dude, Bitcoin is extremely transparent. It's extremely like not really anonymous in that sense. People on crypto are like, Bitcoin's not anonymous enough. So Jerome Powell's completely off the mark. And if anybody would see right through his words, it's like, this guy has no intention of building you guys a better money. He has all the intention of just keeping all of it for himself and making all the decisions within this little group. And they're just trying to, I don't know, dude, like they're just trying to like disguise it or just like dress it up in a different manner.
You know what I think is funny is, okay, have you seen much about this this lady? I forget exactly what her name is, like Melanie something. Anyways, it's the new Italian prime minister that got elected or something, I guess. Have you seen the speech that she did? Dude is killer. And one of the things she talked about was that she had quoted an author or something from back in the day, and the idea, the sentiment behind it, paraphrased, was basically people are going to be getting together and fighting over something as stupid and as simple and logical and reasonable as leaves are green. You know, well, people are going to argue about this all day. Oh, leaves are, you know, different times of the year, whatever. This is what it makes me think of. Here's another tweet that I will say is an honorable mention. It's not a Bitcoiner tweet. It is from TikTok investors, and it says, "Let's start a podcast, bro." And I think that this is hilarious. This is where we're at. This is where we're at with money. People are so disoriented because of what's happened over the past 51, 52 years that these types of conversations are being had about money, and they're real. Listen to this.
If you add 3 plus 1, you get 4.
Correct.
But if you subtract 5 from 1, you get -4.
Correct.
And if you put 4 and -4 together, you get 0. And
Correct.
if you add 4 to the 0, you get 4 again.
Correct.
Isn't that concerning?
Isn't that concerning? This guy's like, what the hell? That's literally where we're at, Griff. This is the truth. Isn't that concerning? Like, what do you mean Bitcoin is decentralized and nobody controls it? Isn't that concerning to you? You mean the other way around, brother. You don't want people controlling money, because then we run into artificial market issues like we're running into right now. And I thought that video was funny, and I thought that it really puts it into perspective of how dumb some of this stuff really is.
Yeah, it's really interesting. I mean, you have to really think about, it's hard for people to get on board with Bitcoin because, I mean, hey, at the end of the day, the finality of it is that a market will decide what is important and what is not. And people are afraid of that because people want to seemingly, it seems like, you know, with the CBDCs and the government and the way things have gone over the past 2 years with COVID, people are very interested in like governing one another instead of just letting money and markets and what people do with their time, like, just decide it, which is actually pretty scary. So I don't know, with the CBDC, I think people need to also understand it's like you're not going to be able to do what you want with your money. You know, there's going to be direction. It's very easy for them to direct that and funnel that to where they want. And with Bitcoin, while some industries might fail, you have to accept that there are industries out there like some podcasts, and you know that it might be like there are certain industries out there right now that probably just need to burn, crash, and never be seen again, because Bitcoin, there is only 21 million, and so you have to think, to get to that future of sound money, it all has to be ratioed, but not even ratioed to the point where every industry comes in. Some just got to go, man. And that podcast was super funny because Funny Money has created, you know, a lot of podcasts. And just for clarity, Nick and I started this podcast and continue to still do it for free, or we just enjoy talking to each other on Saturdays. So I don't really throw us in the category of trying to make money on a podcast, but people are really out there and like that's what they're trying to do with their money. And in my opinion, you know, talented people are really wasting the world's time with needless content, and I think it's mostly because of that Funny Money. Although I don't know in a CBDC world if they're going to try to funnel money and direct it differently or how they would try to do that. But I know that it would be a central group doing it, and I would rather the market decide that, even though the market would be more ruthless and slower. I think that's just more fair. So, so to speak. I don't know.
Yeah, I think a central bank's digital currency would be a very strange world, and I would wonder too. Like, you know, the implementation. The implementation is an interesting thought. You know, like what do they do? Just like give you a static amount of digital dollars that are in exact proportion to what you've got now. You know, is that something that that they do, or how is that going to work? You know, another thought would be. You know, I just saw a tweet actually this morning that the Chinese central bank digital currency is it's time sensitive. It has an expiration date now. And now think about this from a federal government standpoint. That incentivizes people to spend their money, put it somewhere else, move it around. And governments, like we talked about previously, I think it was Connor Chepp's episode, we talked about the government making more money on taxes on the velocity of money versus you just earning money. They make significantly more on the velocity of money. And so they are incentivized to do that. But what it does, and what people are probably missing out on, is that, oh, I can't accumulate wealth anymore, because now this money that if I try to hold it, well, then it just expires. That's not good. That's not good.
Velocity of money. Highest profit margin on the S&P 500 is Visa.
There you go.
Super fun, easy to funnel money. People don't understand, like, corporations play within the system, and they also funnel money, you know, where you don't want it to go. So I guess, so to speak, we're kind of saying that central bank digital currencies will just aid these things that you already really don't like as a consumer, because there's no privacy. There is no do what you want with your money. There is no value even in your money. Think about a CBDC. How much value is in that for you? Really none. You're basically saying you're giving all of your time to a central bank. We all hate banks. Everybody needs to wake up a little bit. And I think people
Greta Thunberg, she said, save the bank, save the world. Did you see that?
That's insane. But, you know, it goes to speak that people need to be able to not trust. We already talked about trustless things. They need to be able to trust what is kind of like our next segment here. We're just kind of talking about the network. And so this is every statistics. Everybody probably can't even zoom in and see most of this. But this is the markets. This is, you know, Bitcoin priced in gold, corporate treasuries, money supply, how much Bitcoin is there. Are you able to
zoom in on this at all? If you click up like on your options or like view at the top of your browser or something. Oh, there you go. Yeah. Yeah, zoom in a little bit more. That's really cool. What? Okay, so this is, what is this deal title?
This is Clark Moody's Bitcoin dashboard. Yeah, I got it because Jack tweeted it one time, and I always saved it into my stuff. But basically, you can see everything. You know, you can see pretty much every price, blockchain height, Bitcoin Lightning node capacity. You can even see all the different stock mining pools. So people need to understand that they can kind of trust, you know, what I would believe, you know, kind of believe is the most unstoppable network to ever exist. And that's kind of what's so important about Bitcoin, is that it's not really about just the 21 million. It's also about the fact that the network has continued to grow through tough market conditions. And you can really see that through how many computers are terahashing currently on Bitcoin. And this actually is structured through the same time frame we've been looking at everything else, even through China kicking it out and all the crazy crap that's happened since COVID. You can see that Bitcoin has actually pretty much almost achieved new all-time highs through, for what I would believe, probably the most speculative time to ever exist in money. So pretty unbelievable. Like, that's where the hash rate is at this point, meaning that the network is growing, meaning that developers on the network can have the confidence to build cool applications now onto Bitcoin, knowing that it will always be there. And that's really, really important. And then I guess the other statistic that I wanted to kind of make sure that we got up here is just how many Bitcoin nodes are out there. And, you know, Lightning nodes is a smaller thing. Lightning nodes are where you're probably going to see a lot of more dApps and where things will really boom in Bitcoin as a network. But Bitcoin nodes are important as well because they're validators on the blockchain. And the more of them that there are, just like there are more miners, the more decentralized basically the whole thing is. And this right now is a current distribution of where all of the Bitcoin is in the world and how many there are. And so you can see.
Can you zoom in on that map at all?
Yeah, you can see.
Beautiful.
You can see where everything is. You can
so
see where all these are Bitcoin
are
nodes as well. This is not mining distribution. And you can argue mining distribution is probably more important, but it is also important to note that node distribution is pretty wide. And nodes are what validate transactions. Nodes also vote on protocol changes. Nodes are heavily involved. And you can see where money is, you know, where the euros are and where dollars are. There's obviously people are getting very interested in Bitcoin, but you can see that all over the world, like there are Bitcoin nodes spreading, which just means that these formerly unreachable parts of the world, economically speaking, are now reaching, you know, the rest of the world through the internet. And the last thing the internet wasn't able to do was come up with a trustless form of money that everybody can use. Bitcoin is that trustless form of money. It just has to be picked over others. So, yeah, it's interesting. I mean, like, that's what the market, I guess, so to speak, that's what the network of Bitcoin looks like right now. And that's 13 years, no board, no investors, no anything, man, no nothing. I mean, you know, you can think about Bitcoin miners as investors, but not really. Like, they're literally sacrificing everything for a digital currency that they believe in, an energy currency, so to speak. So, those are some of the statistics, brother. I think that Bitcoin is doing just fine. And I think it's important for the podcast to always note that this is a podcast where one Bitcoin is one Bitcoin, and it's protected by all of these network statistics that you can see and talk about. And everybody can validate on the internet anytime they want, and anybody can buy a node and start running it on any computer. Anybody can buy a miner and attempt to mine on the Bitcoin network and contribute to the hash rate. And that is the single most important thing of Bitcoin, is free and open to everybody anywhere. Boom.
Absolutely. You know, it begs the question, Bitcoin or Bitcoin? Bitcoin with a lowercase b or Bitcoin with a capital B? We know that Bitcoin with a lowercase b is the commodity. It is the coin. It is the money. That's what Bitcoin with a lowercase b is. And Bitcoin with a capital B is Bitcoin, the network. That is the investment. Bitcoin, the network, is the nodes. It's the mining. It is the Bitcoin Twitter. It is guys like Griff and I getting together and hanging out and talking about what we think the future could be and how best the future could look. That's what Bitcoin with a capital B is. It's the network. Now, speaking of the network, Griff, we've got to make a decision on tweets of the week. So I'm going to pull up a couple of our options here, what I believe to be some of the best ones here. So you'll have to look at some of these with me and tell me what you think here. I think that this one was an honorable mention from Bitcoin Magazine and Bitcoin Mag EDU. Says banks are closed until Monday. Bitcoin's open all weekend. That's a great tweet. That's a killer tweet right there. I think another one that was really good was the one from Pomp that shows all these foreign currencies relative to the US dollar right now. We can see that this situation is getting very strange And to Griff's point earlier, I don't know exactly what this means. I think that there are some people out there that have got some better answers, but dude, this stuff is getting super weird.
My favorite one was the Blue Collar Bitcoin podcast, just because I resonate with those guys so well. Honestly.
Yep, and I was going to say, I think this is probably my vote from the Blue Collar Bitcoin podcast. The more I understand markets, which is still very little, I would put both of us in that category for sure. The more convinced I become that most mistakes are made because people get distracted with overly short time frames. He's referring to time preference here, man. I think time preference is one of my favorite freaking topics on Bitcoin, and I think it's safe to go ahead and say that this is the tweet. Here we go. Tweet of the week. These guys have won. Blue Collar Bitcoin podcast. You guys are the tweet of the week with the more I understand about markets, which is still very little, the more convinced I am that most markets or most mistakes are made because people get distracted with overly short time frames.
Yeah, I just really like that one because we just were out for 3 weeks and you come back and it's like, I haven't paid attention to the news too much, but guys, this was my first break on the news for like a while. Not much has changed, especially if you're a Bitcoiner. Really not much has changed. And there are exciting things happening, and I trust a trustless system, and I'm happy with where I am putting my time currently. And after this podcast, I think I'm going to put a little bit more of my time into this network, if you know what I mean. So, yeah, that's all I got to say, but it was a good podcast today, fellas.
Love it, man. Yeah, I thought it was fun. Hey, come check us out down there at Twitter, at Nyc Griff Show. Come talk to us down there. You can also find the clips to the show on Twitter. Sometimes we post them on YouTube as well. We'll see about that. Takes a little time, but appreciate you guys listening to these episodes. If you're not watching, you can watch on Spotify and on YouTube, and you can listen on all the other major platforms. So we appreciate you guys listening. Have a great week. Peace.